What's up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Powerball. This is your rapid fire show, Tuesday to Friday, every single week, where we bring you a disaster of the day. We bring you a wild winner. And normally we have a hot pick for you where we're calling out a stock. But instead, we are joined by a special guest, and we have a hot stock for you. It's going to be Choubey joining us from MoneyLion, ticker ML. The price has been on fire recently. Full year quarterly results just out, so we'll be digging into that with D. But first things first, let's light it up with our disaster of the day. All right, we are talking about stock Paragon 28, ticker FNA. That's Foxtrot November Alpha, ticker FNA. It's a ticker a lot of you may not be familiar with. It's not one that gets a ton of media. It's not a hot, sexy AI type industry. This is a company that creates medical devices for orthotics, for ankles, for your feet. We're looking at a stock that's off about 15% today. Quarterly results just came out last night. They were okay, not great. Okay, but not great. But we are looking at a stock that is down 15%, not because of the quarterly results, not because of the analysts. The analysts came out and basically reiterated their opinions on the stock, which are generally neutral, nothing crazy positive or negative. But because the company announced that their CFO is leaving, which sometimes can be okay. But when you see these executive headlines, you've got to read into them. You got to do a little bit of homework. And it turns out that the CFO was leaving to go to another company in this space. So it's not a situation where the CFO is kicked out because he wasn't doing a good job. It's not a situation where the CFO is ready to retire and move on to another chapter of life. The CFO is, in fact, voluntarily leaving the company, again, ticker FNA, in order to go to another company in the space. That is not a great sign. CFO executives of these publicly traded companies are compensated in stock options. They make a lot of money when their company and ultimately the stock price makes a lot of money. Value is created for shareholders. And the fact that you have the CFO, number 2 executive at the firm, deciding to leave and go to another company in the exact same space shows that this CFO, who has a ton of insight into the business, is for some reason cautious, for some reason sees more opportunity at a competitor. And for that reason, Paragon 28 is, in fact, our disaster of the day. Yep, that'll do it. All right. Positive side of things for us today. We have our wild winner. It is Aurora Cannabis, ticker ACB, Alpha Charlie Bravo. If you've been in the stock market, if you are a retail stock person like I am, have been for any number of years, you are very familiar with this name. We're going from one that you've never heard of to one that you are more than familiar with. Aurora Cannabis, one of the very hot cannabis stocks a number of years ago, one of the few that trades on a major U.S. exchange. Stock is up. Yes, check your charts. I promise you, stock is up 80% over the last 2 sessions. I like it. It's fun. It reminds me back of the wild cannabis days that we had, and I think it was 2019 or so, when we had a lot of fun with those cannabis stocks. But pot, yeah, as Ryan Fluna in the chat is saying, pot names are lit up today. It's true. Aurora is our wild winner. We've got a slew of news coming out. You got Germany's recreational law going into effect where people can just buy pot and smoke it openly on April 1st. So that just happened. You've got the Florida Supreme Court putting it on the ballot. That Florida is likely to become a recreational state. And you've got chatter going on that the Biden administration will make a move about federal cannabis regulation sometime between now and the election, which is taking place just about 6-7 months from now. Cannabis legalization is viewed as a populist issue. When you're running for president, you need every little boost that you can get. And that's what makes now an especially interesting time for cannabis legalization chatter. For that reason, ACB, Aurora Cannabis, is our wild winner of the day. If you care about pot stocks like I do, in just 11 days, Benzinga is hosting its 19th Cannabis Capital Conference. It is in Hollywood, Florida. Come get some sunshine. We're going to have 98% of the cannabis market cap there represented, presenting, networking. We're about to throw the URL up on the screen. Shoot us a note. If you want to go, send us a note to events@benzinga.com, events@benzinga.com. Check out the website, bzcannabis.com. And I would love to see you all in Miami, especially when pot stocks are, as Ryan Fluna put it, lit up. And with that, taking us to our third and final rapid fire segment of the day, I'd like to welcome D. Choubey, CEO, founder of MoneyLion, onto the stream with us, ticker ML. That's Mike Lima, ticker ML. Let's go ahead and bring D on. All right, I gave a little bit of an intro at the top, but I will say it again. MoneyLion just out with quarterly annual results, record numbers, both on the revenue and on the EBITDA side of things. Stock price has been on fire. D, welcome to Benzinga Powerball.
Hey, thanks for having me. Really glad to be here.
Absolutely. And for those of us who aren't familiar, just tell us a little bit about the MoneyLion story and what exactly MoneyLion does.
Yeah, absolutely. Look, I think a lot of people may remember us as just a neobank, but we're a lot more than that. We're a neobank, of course, on the consumer side, but we're really powering the financial marketplaces all across the internet. So if you oftentimes see a mortgage quote or personal loan quote or credit card quote on your favorite website, oftentimes we are the technology that's powering the rate table. So think of what Kayak does and what Google Flights does. We have a similar network of lenders, financial institutions, banks, insurance companies, credit card companies that integrate with us. And then we allow any publisher, it could be Benzinga, it could be CNBC, it could be many other folks like that want to monetize your eyeballs. So we're now seeing incredible growth in the total number of impressions. 205 million inquiries were made on our technology in 2023. And of course, the consumer business continues to do really well. And that consumer business has always been one of the most feature-rich, super apps out there, right? So if you download MoneyLion, you'll get banking, you'll get stock trading, you'll get managed investing, you'll get roundups into crypto, you'll get lending, you'll get access to that marketplace that I just talked about. And what you'll see is we're trying to deliver financial services in a way that Americans are now used to through their Instagram reels or through or through their TikTok. So we're really kind of taking the bank transaction data, the financial life of the consumer, and presenting that back to them in a much more digestible way than what you see in the market out there. And like you said, all of this is coming together and showing up in our financials. So we generated $423 million of revenue in 2023. That was up 24% over the year. And importantly, we're starting to generate consistent cash flow, right? So we had 46 million of adjusted EBITDA. I know adjusted EBITDA gets a bad rap on X and Twitter, but our adjusted EBITDA is actually pretty clean, right? We adjust out stock-based comp and a couple of things that are indeed one time, but our conversion to cash flow from that adjusted EBITDA number is quite high. And I think the other thing that we said on our earnings a couple of weeks ago is we feel really optimistic about the year, starting off the year. And we've pointed the markets to the rule of 40, which is the growth rate plus the EBITDA margins always going to approach or be above the number 40. So all those things together give us a lot of confidence for the year.
All right, D. So you mentioned the record revenue. You talked about the marketplace, the embedded finance. What else are some of the big drivers?
Yeah, look, I mean, there continue to be tailwinds in the market, right? So we can't forget that we're operating right now in a tough backdrop for marketing expense. So insurance companies, banks, fintechs are still pretty wary of spending marketing dollars to grow, whether it's their loan book or their credit card portfolio, or mortgages are effectively dead. Despite all of that, we've been able to show that we're approaching the rule of 40. And that's a testament to how diversified our business is, right? So we're not beholden to one asset class or one vertical. But what it also tells me is that we have built-in growth. So as we do see the interest rate regime, the Fed funds in the back half of the year modulating to something more reasonable, you could expect that even above where the analysts have the forecast, that there's some built-in growth just by reversion in sort of the macro, if you will. But look, I think you should think of us as an innovative company. We've publicly said that we're launching our AI-powered search product in the next couple of quarters. We've got a couple more product launches that are coming up as well. So the way we've really set up this company is Our engineers and our product managers are top notch. They're the world's best, and we'll continue to be building features and technologies for our consumers, never for them to have a reason to leave our ecosystem. It's an ecosystem play. It's an information play. The more consumers coming through one side of the network, the better the other side gets, and there's a lot of synergies and flywheel between that. So we expect the growth rate that we've put out publicly to really kind of persist for the foreseeable future.
Awesome. And D, you've commented on the stock price before.
Yeah.
Versus a couple quarters ago when we chatted, stock price looks radically different. You are having your shining star moment. How does it feel? I mean, it was a couple of tough years, and now you're in the limelight.
Look, I don't think the work is done yet, right? I mean, we told ourselves that the stock price is not the company on the way down, and it's not the company on the way up, right? So the job is not done. I don't think anyone here is high-fiving just yet on the stock price. It's good to see though that the markets do react when you execute. So we're going to continue executing, and in the long run, the adage as it goes is that it's a weighing machine in the long run and a voting machine in the short term holds true, right? So we're here to build an iconic American brand. We're here to build a company multiples of the size that it is today, and none of us are kind of popping a champagne bottle and high-fiving just yet in terms of where the stock price is. I think there's a lot more work for us to do. But again, if you're working at MoneyLion, and we've got some great people that work here, it's a good milestone just to kind of know that the 90 hours that you put in every week into the job is being recognized. But like I said before, I think that there's just way more to do here and way more opportunity ahead of us.
All right. Well, I was ready to high five you just so you know. Looking back from a year ago, I mean, we've done this every quarter for a number of quarters now. You're up 5x over that period of time. I mean,
well, the markets are weird, right? I don't think there wasn't that much rhyme or reason in terms of why it was that low. I think that we got caught in the whole, your next X SPAC or a D SPAC. I think the markets were pretty trepidatious when they saw a couple of quarters of losses. But if you kind of take a 30,000 foot view out, those losses were important because they were a testament to the investments we were making. They were testament to like the data that we were collecting, and you needed those investments and that data sets to now be able to monetize it the way that we are, right? So, but the markets sometimes are fairly myopic and fairly short-term focused.
Yeah, and in the press release, you mentioned you were working on a positive GAAP EPS in Q1. We're through the quarter. Any indication how that went for you all?
Well, look, I can't talk about the quarter, but what we said in the earnings, of course, was that we're eyeing positive net income, GAAP net income, so positive EPS inside of 2024, and we remain very optimistic about that, and we feel like that's going to be yet another milestone to illustrate and exhibit to the markets that yes, we can take it from adjusted EBITDA consistently to free cash flow and finally to GAAP net income. So again, it will be a good kind of marker in our evolution at some point in the year.
All right. Last thing I'll ask you, I see the MoneyLion way on the screen behind you. Any aspect of the MoneyLion way you can highlight for us?
Look, I think the number one is fuel the business equation. It's to iterate, it's to own it, right? So we live in an environment where accountability is different from when it was 5, 10, 15, 20 years ago. So I think everybody that works here owns it. They own the outcomes. We act as owner operators. And I think that's one thing that differentiates the person that works at MoneyLion versus elsewhere is everyone here owns equity in the business. Everyone here is an owner. Everyone thinks like an owner. They think like an entrepreneur, and they're obsessed with customer outcomes. So that's one thing that I think differentiates and ultimately drives the invisible hand that leads to 10x outcomes on the product side, on the customer experience side, and the client success side.
Awesome. Well, D, thank you for joining us. Congrats on the success. I know you said job is not
Appreciate
done.
it.
We'll look forward to hearing more.
All right. Thanks. Talk soon.
All right. Take care. All right, everyone. That is your Benzinga Powerball for the day, your rapid fire show. We gave you a disaster of the day. We gave you a wild winner, and we had a hot stock on for you. With that, I will see you all at noon Eastern tomorrow. Happy trading.